Welcome to Investors Insights. Our topic today is Rate Cut Grinch. All the conversation about the Fed and interest rate cuts. And, here we are at the holiday season. We had some great conversation ending the year, going into the holidays, as well as going into next year. And we chose Rate Cut Grinch, and you're getting ready to find out why. First of all, Bobby Norman, who's on the screen here with me, and Trey Booth and Ty Miller, the three of us started out just talking about Christmas. And Bobby interjected with his Christmas wish list. And so, Bobby, I think that's a great place to start as we go into the holidays here.
Yeah, so obviously, since we're in the holiday season, I wanted to share our investors' wish list for 2024. So a couple here. The first one, the Fed avoids a stop-and-go monetary policy. So as we know, inflation was running at a 40-year high of 9.1% in July of 2022. We are now, and that's now down to 3.1% today. So obviously, calls for the Fed to ease have only intensified since the Fed's pivot earlier last week. But it should be remembered that inflation often comes in waves, and we hope that the Fed is clear in their messaging next year, as the market doesn't like uncertainty. The second wish for 2024 is for broader equity market performance. As it stands today, the five largest stocks in the S&P 500 represent an astounding 25% of the broader index.
That's wild.
Yeah. In fact, the top two companies alone represent more than the energy, materials, utilities, and real estate sectors combined. Again, the first half of 2023, we saw only a handful of stocks contribute to the most of the S&P 500 performance, and few would dispute these are great, world-beating companies. Still, such concentration creates systematic risk for the markets and the capital formation process. And so obviously, finally, a broader market would give both businesses and consumers confidence that the economy is on a broad-based, solid footing. The third wish is for the return of stock splits. As you can see in this chart, the average price of a stock in the S&P 500 was $163 at the close of 2022. Currently, the average stock price is $198, and that's trading more than 5 times the average price 20 years ago. So stock splits, which would lower the cost of the average share price, would bring more trading volume to the markets and help a number of small and mid-sized public companies have better coverage in the markets. And last but not least, for our investor wish list next year is for there to be a clear winner in the 2024 presidential campaign. There's no doubt that the presidential election campaign and cycle next year will be interesting to say the least. And a clear winner on the night of Tuesday, November 5th, would be one would hope would allow the country, and perhaps more importantly, the political candidates themselves to move on. And so investors and businesses would have a clearer idea of what the policies would be and what the policies would be enacted. And so obviously they'll be able to adjust more quickly to the results. At the end of the day, politics matter for markets, and every election year impacts the market in many ways.
That was a great summary. I was a little disappointed that you didn't mention gifts for Trey and Ty and I for Christmas that on your wish list. But other than that,
coming later. That's coming later.
I thought it was outstanding. But then in that meeting, Trey stepped forward and introduced us to a possibility that rate cuts can be a Grinch. And so, Trey, if you would continue the dialogue here, because I thoroughly enjoyed our debates this morning. Go ahead and share your thoughts.
Yeah, absolutely. Greg. Thank you very much. Yeah. So in last week's video, we talked about how the Fed decision on Wednesday was going to be market impactful, and it absolutely was. The market got what it wanted and rallied strong after the Fed decision. And now the market looks to be pricing in 6 rate cuts for next year. Lower rates, a lot of people like lower rates. It helps housing. It helps auto financing. But it's a little confusing for us because history doesn't show that lower rates is always good for the market. So what we've been in right now is what's called the Fed pause. And what that is, where the Fed raised rates up until July and has stayed at 5.5% as the high rate. Now that's their pause. Now, pause is great for markets. Let me show you this chart real quick, and it's a little hard to read, but the basic assumption is that you can see the x-axis is number of days from the last rate hike until the first rate cut, and then the y-axis is the return of the market. So you can see the longer you go, the higher the return typically between the last hike and the first cut. Right now, we're right in the middle at 100 days and a 5% return since the last July Fed rate hike. So we're kind of in that Goldilocks time period where not too hot, not too cold, the Fed is pausing. But the market, like I said, is expecting 6 rate cuts next year. This next chart shows the average return of the market after the first rate cut. And you'll see only 1980 is a time period where the market actually went up after a rate cut. Every other instance, the market falls. So I'm not really sure what the market's celebrating here. If the Fed is going to cut 6 times next year, that looks like a terrible time for the market, where we would see a large amount of down. The average here is 23% lower in 213 days. Not a very positive move. So I'm not really sure what the market's pricing in here. So we may be getting what we wish for, which is rate cuts, but that's very Grinch to me. That doesn't seem like there's going to be much green after the first rate cut. So just some data we noticed that Strategics provided us that really doesn't make sense what the market's doing. But as always, we'll take a Santa Claus rally when it's given to us.
We always welcome Santa Claus rallies. Every year we like those. But I thought your analogy was great and very appropriate. And so we'll hope the Grinch doesn't show up. So, and then Ty, because of the strength of the market, we were talking about that today. We've had, as both Bobby and Trey have talked about, we've had a strong market here. Elaborate on what you're seeing in research for next year.
Yeah, thanks, Greg. And to kind of offer another viewpoint to Trey's point about the rate cuts, this is something that we deal with internally. Of kind of Trey made a great point on the fundamental basis of what happens after rate cuts. On a technical side, though, the S&P 500 has gained for 7 consecutive weeks. This is a fairly rare occurrence, happened in 29 times since 1955, and on average, the market is up about 8% 1 year later. It has declined 5 times out of those 29, so pretty rare that it would decline. But I would mention that 4 of those 5 declines happened the year before a presidential election year, kind of like we have this year. And so that's something we want to be on the lookout for. Not saying the market is certainly going to go up. Past performance doesn't lead to future results, but technically this is a good point for the market. And shows strength leading into next year, despite some increasing volatility with politics and with potential Fed rate cuts. One catalyst that could be on the table is perhaps a weakening dollar. As you see in this chart here, the dollar has gone through some peaks and valleys over the years. I know a lot of our clients get concerned over dollar weakness, but I would mention that typically a weaker dollar is better for the stock market, because a lot of these companies in the S&P 500, they're so big, they're trading a lot of international goods. A weaker dollar allows our international counterparts to buy more of those goods.
And we like for them to make those purchases, not just during holidays, but year round, right?
Absolutely.
So with that, folks, we want to wish you a Merry Christmas, Happy Holidays, and going into the 2024 year. We're very excited about the different information and research we're seeing. Of course, there's no guarantees, but we're going to navigate through it just as we have this year. And we also want to thank you. We are very fortunate and blessed to have those of you as clients. And we just hope you, your family, your friends have a great holiday season. And we will keep you updated over the next couple of weeks through our social media on LinkedIn, Twitter, Facebook, YouTube, podcast. And we also just want you to know that as we go into the 2024 year, how much we appreciate you, and that every day here at Five Plan Partners, we strive to see to it that our clients have better, richer, fuller lives. Merry Christmas. Happy New Year. See you in 2024. Thanks.